All right, what's going on, everybody? Christopher Franks with Texas West Capital coming at y'all live here. What is it? It is just after 11 a.m. Central Standard Time on Friday, the 2nd of May, Jobs Day today, 2025. Hopefully, y'all are doing all right here. Before we get going, please do me a favor, hit the thumbs up, hit the likes, leave a comment. I know many of y'all don't do that. It is what it is, but I would appreciate it. It's something simple that you can do to help the channel kind of get out there more and reach more people. Because honestly, I suck at marketing. Excuse me. I suck at marketing. So anything that you can do really does help me out, especially if you believe that what I give here is valuable. And I definitely try to make it valuable, guys. I'm not out here just to get people to follow me or whatever. I'm here to actually give you value. And hopefully you get that value and you go, man, as somebody I want to, follow along with and see what else he's going to talk about in the future. So Peter bringing up the wiki. Inside joke from our members over there at TWC when we do the live trading. We had a little fun with that. By the way, man, yeah, so, we do some live trading there 3 days a week. I trade with our students. We trade the micro contracts for the S&P 500. And we tend to do pretty damn well. It's not every day's a winner. We trade usually within the first hour, sometimes a little bit beyond that when the market opens. So, we got to give it a little bit of time to settle down and whatnot. But we do that 3 days a week. And we've been doing it just, about a month and a half now, something like that. And we are well up. We didn't have the greatest week last week, but the proper risk management is what does it. I keep telling you guys over and over again. And so, again, I don't do the live trading to have people just copy my trades. I mean, you can, obviously, and some do, and that's fine. But the real reason I do it is what our students seem to get, which is, understanding the thought process when we're trading. We trade the 1 to 5 minute time frames. And so, I spend the time discussing what I'm thinking and why, and what I'm looking for in order to get an entry. It's not like, oh, I'm just going to jump in an entry here. And so, we talk about that. And sometimes, I say, this is what I'm looking for. And as it's developing, price action and volume give us a different feel. And I'm like, well, okay, so now, we're going to kind of change this. I'm going to look for this now because that doesn't look as promising. So the idea is just to continue to give you all this, to move from courses to the weekly sessions that we do to the live trading. So that way you get this idea of how to go from theory to actual implementation of what I teach. Growing up, in the markets, the way I did, the biggest difficulty I had was kind of taking that, what I was reading in books. Yes, I said books, folks. This was before internet was a big thing and whatever. But what I was reading in books or newsletters that I was getting in the physical mail, USPS, man, United States Postal Service. But it was moving from that theoretical to the actual implementation, to what you're doing day to day actually in the markets. And that was always one of the, the largest, most difficult things I had trouble with. And so, I continue to work on ways here at TWC that we can overcome that. Because if I was having that issue, I'm sure every new trader is having that same issue as well. So, anyway, glad to see y'all here. Oh man, you guys, I appreciate you guys. You say nice things here. Ken, the Sailor Watts. I've never been a sailor. I've thought about it a few times. He says, you rock and the real deal. Thanks for the education. Hey, I appreciate you, man. Bernardo, back on the platform. Buddy, great to have you back, man. He says, it feels good. Any Fibbo today? No, Jack. Unfortunately, Fibbo had something to do last week and this week, but he says he should be back next week. Friday. So, he tries to do this on his times when he's got personal stuff he has to do, and he's got his day job, that hopefully we can get him out of and get him full-time at TWC at some point. But we need people like you spreading the word and letting people know what you think, I tend to, there's so many people out there, guys, that are just going to make you think that trading is this just absolutely wonderful thing and it's always fantastic. And it never goes wrong, and life is great if only you had this one specific system. But that isn't real life. And so what I tend to do is, like I do on the show here, is I tend to talk about the realities of trading. And I try to reinforce the important things that you need to know, proper risk management and using it, understanding market psychology, understanding your own emotions, things like that. And, unlike most people that are out here trying to just, pay it lip service, guys, I've got a degree, I've got a master's degree in applied psychology. So, plus 30 years of trading. So, hopefully the way I approach this helps you out as traders, because that's the goal. Because if not, what am I even doing here? I'm just wasting my time, right? I can just go back to trading every day and not worry about it, though that is a lonely thing. So live trading, bringing it back to the live trading, is actually pretty great for me, because I get to actually, connect with my students, one-on-one, kind of right there in that group. And we get to trade together. I gotta give a shout out to Sats, man. So we've got a trader. He goes by the name Sats McGee, one of the best, I think one of the best names out there. But anyway, he locked in something like 93 points yesterday. He did 3 trades. He did one with us, I believe, during the live, and then did another one in the morning, and then did another one in the afternoon, and just rocked it. 93 points. If you guys don't know, 93 points is huge in a day when you're trading futures contracts, especially for the S&P, because futures contracts inherently have some leverage built into them. It's not like you can go out there and go, oh, well, I'm going to trade like, 10x on this contract. You don't do that. But when you're trading contracts, each contract has some leverage inherently built into it. And so, again, 93 points is absolutely amazing. If you're doing micro contracts, the e-micro minis, which is what we're trading, that's $5 a point, guys. $5 a point. So if he just traded one contract, each one of those, he made almost $500. If he traded 10 contracts, made almost $5,000 yesterday. So, there's a lot to learn about that. And of course, I'm using a prop account with that. I passed one, and then I opened a different one because the first one was a static loss, and the other one is that one that follows you up. And so I want to do that because some of our students want to learn how to trade, with prop firms. And so I'm doing that live with them and explaining the things that you have to understand when you're trading. That's different than when you're just trading on your own. So, it's all about the education, y'all. Let me see here. Let me see what else you guys got here. I don't know how to read, just interpret charts. Thanks to TWC, says Peter. Mark, what's going on, buddy? My favorite Canadian here. Hey, Mark, talk to Tillman and Andrew, man. They've got some really great news. I don't know if I'm supposed to tell you, but hit them up and ask them about Canadians being able to be a part of Arch Public there pretty soon. So yeah, I just threw that out there. Luke, what's going on, man? He says, I'm watching other people like Crown, who is great, but other people like him saying top is in or close, and other people saying like no, top signals are in. It's confusing because everyone seems legit. Yeah, it's a tough thing. I'm not even gonna sugarcoat it, my man. It is tough, and it's even tougher. Again, guys, I grew up in trading before the internet was a thing, right? Before widespread internet was a thing. I can't imagine, honestly, trying to learn how to trade today and hanging out in social media, because most people on social media that have a following, they do so because they're great at marketing. They're rarely great at what they're talking about. See what I'm saying? This is the big secret out there, which shouldn't be a secret. But most of the big accounts in whatever it is that you're looking at, most of them are just really good. They figured out the marketing side of it, but they're not really so great, or maybe they're just average if they're lucky with the thing that they're trying to sell you into. And that's really big here with crypto as well. Because when you come in, the first thing you think about as a trader is, man, how do I turn a very little bit of money into a very big a bit of money, right? I mean, that was the way it was when I came in 30 years ago. It's the way that I've seen every market and talked to new traders who come into every market since then. We all are the same person when we come into trading. And that's not the right way to think about it, because you're going to lose a lot of money. There's just no two ways about it. And so a lot of your big accounts, especially when it comes to crypto, Twitter, whatnot, are degen accounts. And everybody's out there trying to wear it like it's a proud badge. Oh, I'm so proud to be a degen. Don't be proud to be somebody who loses their money, pretty much guaranteed because of the way in which they structure what they do. I don't understand, at 50 years old, guys, I don't get it. I really don't. Maybe I'm pretty tech savvy and all, but maybe I'm just behind in the way the young kids think today. But if you want, me to talk to you man to man, man to woman here, stop with the nonsense. You got to be serious about trading if you want to be successful as a trader. There is no two ways about it. You can talk there and hype up being a degen and all that silliness, but that's going to get you exactly what it's gotten you, which is absolutely nothing. I see a lot of these accounts that get on there, and then somebody shows later that these accounts are running through accounts, they're just blowing their accounts over and over and over again, but they make it seem like they're doing really good on Twitter and whatnot, or X and other social media. And for me, I trade live. So I can't say I do or don't do whatever. Our people get it 3 times a week. And not just that, of course, with the calls and everything I make, I don't think there's anybody that's called more bottoms during this cycle in stocks and crypto than I did. And I did almost all of them here publicly, whether on here or on Scott's show on a Wednesday. So, I try to be as transparent as possible, but at the same time, why do I use a prop account instead of my own account when I'm trading live? Well, 2 reasons. One is because, again, trying to help people understand what it means to trade a prop account and how it works and to see it actually working. But 2 is, you guys, you know what? You got to be honest. Why would I put my net worth out there in the world for all the bad actors out there to see? Have you not seen all the people that get attacked and whatever, and kidnapped and whatever? It's just silly. I've got a family to think about, got myself to think about. So it doesn't make a lot of sense to put out, my personal accounts and stuff like that. But, again, if you question, can he trade or not? I do this 3 times a week live. So, the answer is right there. Yeah, I can trade. And you can trade, and hopefully you'll become much better a trader than I ever was. That's my goal, because you know what? You becoming a better trader than me doesn't hurt me at all. It doesn't affect my success. But I'll be honest with you, it makes me feel damn good. We've got a few traders who honestly seem like they're doing a lot better than me. And I love it because they come back and say, listen, it's because of what I learned from you. Man, that feels freaking fantastic, right? So, yeah, when you're getting out there, there's going to be a lot of accounts, and it's difficult when you don't know, especially when you don't know what you don't know. It's really hard to kind of, separate the real from the lipstick on a pig kind of thing, right? I've heard nothing but good things about Crown. I know Fib knows him and everything, so I obviously don't have anything bad to say about him. I don't know him personally. I've never watched his stuff. I just don't have time to watch everybody out there. But there are a lot of accounts out there that are blowing smoke up your rear ends, guys, and you have to be careful. You really do. How long did it take you to become profitable in day trading? I've told this story before. I lost money for like the first 4 years. I was intense. See, I started because I grew up, and my father was in the Navy. And the one thing he always said to me was he would be so frustrated because he'd spent a life, he'd made a career out of the Navy, and he'd done really well. My dad's really smart, and he's one of the hardest workers you'll ever see. He was working still 7 days a week, a decade ago. And he's in his mid 70s now. But the one thing he said to me as I was growing up that always stuck with me was, he would get so frustrated and he'd be like, man, I hate that. And he'd use his sailor language, not Michael Sailor, the sailor out on the sea, the Navy sailor anyway. And he would talk about how much he hated the guy that was his boss, but he had to respect the uniform. And man, I'll tell you what, growing up, that always bit me wrong. I was like, man, I can't stand the idea of having to do what somebody else says, even when they're clearly wrong, just because they're above me, in rank or job or whatever. And so I decided, that I wanted to do something where I didn't have to, do what somebody else said every day. And that's what got me into trading right out of high school. And so at first I had to work while I was trading because I was putting all my money I was making into the market and losing it. So it took me probably about 4 years before I started becoming actually like consistently profitable. And it was because after 3 years, I said, holy crap, I either have to figure out what I'm doing here and be real about it, or I just need to figure out what kind of career I want to have. And I'm going to have to go work for somebody because I can't keep, funneling all this money into something where I'm just losing it. Right. And so, so for me, it took me about 4 years. Now, what I try and do with TWC is I try and shrink that down for our students. Again, I look back at everything when I was coming up in trading, and I look at what did I wish I knew at the time when I was learning whatever it was I was learning. And then more importantly, I also ask myself, well, what didn't I know that I really should have needed to have known? And that's where I always start from when I'm teaching, are those 2 points. What did I wish I knew when I was first getting going? And more importantly, what are the things that I didn't even know that I needed to have known? And then that's how we approach it. And so, everybody's different. Realistically, your commitment to trading is going to determine how long it takes you. I've said it before. Often we're very kind to ourselves, right? We kind of push ourselves up much more than what we are. And we kind of we downplay the bad takes that we do. And so, what that means is a lot of times we'll say, oh yeah, well, I'm really trying at whatever we're doing. But reality check, guys, most of the time you aren't. I'm going to be honest with you. You aren't. I'm not. I still make sure, because I know this, I have to look at this every time I say I'm really putting some effort into something to make sure I am, right? Because we get out there, we say, oh, I'm really trying. But what we're really doing is we're not focused. We're doing other things as well. And then we go, oh, look, it didn't work. Whatever it is you're trying to learn, right? Again, it's not just trading, it's whatever you're trying to learn. We kind of half-ass it. And then we're just like, oh, look, it doesn't work. But really, it's us. It's our lack of commitment. It's our lack of focus. It's our lack of discipline. It's our lack of effort. So that was me when I first started out trading. I thought I was putting in those things that I needed to do, the time, the effort, the commitment, the discipline, and all that. But it took me 3 years to become honest with myself and go, I can't keep lying to myself. I've been half-assing it if I'm lucky this time, expecting just to get rich because I'm in it. And so, most of what keeps you from being successful as a trader, honestly, 90% of it is you. It's your lack of being really honest with yourself. It's a lack of, again, that commitment, that discipline, that stuff that you have to do in anything that you learn. I'm not saying trading's not special, guys. And you don't have to have extensive degrees. You don't even have to be a graduate of high school to be successful as a trader. But it does take understanding what I'm talking about now and getting off, understanding the emotional and the psychological things that are going on, understanding the importance of proper risk management, and then applying it consistently every time you trade. Because it's always this, oh, I do some risk management, I'm not going to do it on this trade. Oh my God, we're going to just blow up. Awesome here. And that trade tanks you and you lose all the work that you put in for whatever it was, weeks, months, days, whatever it's been, where you've done well. And so, contrary to what you may be thinking, what most people think when they come into trading, you don't need another system. You don't need another indicator. What you need is to put forth the effort, the time, the commitment, discipline, all this stuff that you need to learn what you're supposed to be learning and then to implement it consistently. And that's where most people fall off the wagon there. That's where most people have the trouble when they're starting to learn to trade. Okay. Let me see here. Peter, what'd you say there? The coaching is fantastic and love the trading, and the live trading is even better. Well, I'm glad you love live trading in there as well. Bamboo, what'd you say here, buddy? He says, trading is something that you need to develop your own style. You need some time, like at least 2 to 3 years, and learn different approaches and later fine tune them to your personality. Yeah, you should expect that. And see, I say that, and most people leave when I say that because it's not what they want to hear. They're like, oh my God, well, I want to get rich tomorrow. Well, yeah, we all do, but that isn't reality. That isn't what's going to happen. And heaven forbid, if you did, let's say you just kind of dump some money into some shitcoin, right? And it all of a sudden just rocketed up 10,000% in the next 2 days, right? And all of a sudden you made a lot of money from, okay, great. Yeah. You know what's going to happen with that? I guarantee you what's going to happen with that. You're going to lose every last bit of it. And pretty quickly too. Because it wasn't built on a foundation that can support it. It was just luck. But too many times as traders, we come in here and we think that we're something special because we got lucky. We don't realize, honestly, there's no foundation here. I don't really know what I'm doing yet. I just got lucky. And that's why the money goes all back, because you continue trying to do it instead of just taking that money and running. This is the reality of trading, guys. This is what you deal with day in and day out, whether you want to admit it or not. I know. I've been there. I've talked to thousands and thousands and thousands of traders over the last 30 years. It's always the same story. Just the names have changed to protect the innocent, right? But it's always the same story. Every market, every new trader that comes in, whether it's crypto, stocks, Forex, futures, whatever it is. Okay? Let me see here. Kind of catch up with you guys here. Can you show your long-term this cycle wave counts to the top? Are you talking about for Bitcoin? Yeah, I've shown them before. I'll talk about them here today. Sure. Do you ever take hedge shorts to build long positions and layer in for long-term trades? Luke, I'm going to be honest with you. Most of y'all never need to even think about that. Honestly, that's an extra level of sophistication that if you're not already successful just doing the day-to-day stuff that you have to do to trade and make profits, adding that on there is just going to make it a lot more difficult. Most traders don't need that. Traders come on, again, on crypto Twitter and whatnot, or crypto X now, whatever it's called, I guess. They're like, oh yeah, I hedged this and I hedged that and whatever. But the reality of it is, it's just a lot of noise for most traders. Unless you're already a consistently profitable trader as it is, adding in all that hedging and stuff without fixing the base stuff first, it's like, what are you doing, right? It's like putting a supercharger on a car engine when the engine is blown, right? When it doesn't run. Well, what are you accomplishing by putting the super blower on it, right? The blower on it, supercharger on it. What do you don't gain anything from it. It just sits there, right? It's a waste of money. And so, for me, I may use hedging every once in a while, but not usually. I've got a much, the way in which I trade, is very, very much focused on risk management. And so I don't really ever have to, jump into all that. To me, that's a lot of extra steps that I try and keep trading as simple as possible. I guess is the easiest way to, to explain it. But, the hedging thing became a big thing on crypto Twitter a few years back, and it's always something with crypto Twitter, something catches on and all the, the big accounts start talking about it. And then everybody's like coming in going, oh, what's this? It's something else I don't know. I need to learn it. There's so much I need to learn. But yeah, I honestly, Luke, I wouldn't, if you're not already consistently profitable on a day-to-day basis as a trader, I wouldn't even think about worrying about hedging and whatever. That's, like I said, this whole other layer of complication on top of what you need to be doing as it is. You've got to crawl, then walk, then run. I guess you could speed walk and then run, right? And then fly. I mean, you don't just go from crawling to flying, right? I hope that makes sense. Let me see here. Let me see here. Christopher Campbell says, I never hedge, just risk manage the open position. I funnel winnings into my long-term account. Futures, micro E-minis are my main day trade. Do you trade multiples, or you just trade like S&P? For those that don't know, the S&P is the most liquid market in the world. So when you wonder, well, why are people always trading the S&P or the micro S&P, MES, or the ES, the E-minis? Well, because the S&P 500 is the most, the S&P 500 futures are the most liquid market in the world, guys. So that means you can trade, you can get big size and trade in there, and you're always, basically going to be covered. You don't have to worry about, when you're trying to trade like crap, these shit coins or whatever, right? And you get up there and you're like, oh, I can't exit because there's no liquidity for me to exit into. Right? Let me see here. Bobby, what's going on, buddy? Chris and Fibbo at TWC will open your eyes to a whole new way of looking at the markets and market movement. Best thing ever did was joining TC. Man, I love it. Thank you for saying that. So I mean, this is, again, if you want to join us, you can do so at texaswestcapital.com. We'd love to have you there. If you want to do it on your own, I'm going to tell you, it is going to be a lot more difficult. Most people don't become successful traders on their own. It is what it is, because again, trying to move from that theory to actual application is difficult. Not understanding proper risk management and using it consistently is difficult. Not understanding the psychology or the emotional side of it is difficult. I'm not saying you can't do it on your own. I didn't do it on my own. I tried. I ended up taking multiple mentors over the year to get where I'm at. But some people do. Some people do. But what I want you to take from that is that most people, like almost all of them, don't, right? And we always think that we're the exception to the rule. Again, this goes back to what I was talking about earlier, about how as human beings, we kind of look at ourselves and the things we do, and we overinflate the good things that we do, and we kind of just, gloss over the bad things that happen and make them seem like they're not so bad. And that's really dangerous, especially when you're in a market, because the market is truth, guys. If you're wrong, you lose money. If you're right, you make money, period. And so the more you lie to yourself while you're in the market, the more money you're going to lose. There's just no two ways about it, right? Christopher Campbell, you trading MES mostly? You decide usually 5 contracts and trim on the move to let one run? Yeah. I got you, man. Yeah, I'm usually trading anywhere from 3 to 7 or 8 micros in the live trading that we do. So yeah. And the good thing about it is, again, I had a kind of a rough week the previous week. No losses were really great. They're all under 10 points though. And it was like three trades, I think, maybe 4 trades for the week. But because of proper risk management, right? And then on Monday of this week, the first live trading made all that back and more. So completely canceled out the losses they had last week, right? But what I did also was, when I was doing poorly, I was using more contracts. And so I dropped it down a bit until I started getting going again. And, again, trying to teach our students that are watching that, listen, if you're finding that you're having trouble at a certain time, that for whatever reason you can't seem to get the profits going, bring down your size. Bring down your size. Don't put yourself at greater risk. You don't have to lose more than what you have to lose, right? That's the thing. But, again, our goal over at TWC is to make you guys understand, hopefully, that trade, the realities of trading, and you're not going to be winners all the time. You are going to lose. The only guarantee in trading is that you're going to lose from time to time, no matter how long you've been doing it. And the newer you are, the more money you're going to lose, and the more often you're going to lose it, right? That's the absolute only guarantee. You have no control over where price goes or doesn't go. Your only control is, where do you exit? So when I talk often, we're about to get these charts here, guys, but when I talk often about the most important, retail traders come in and think your entry is most important, but the professionals know that your exit and your risk management are the most important thing, right? Because that's why. Your exit is absolutely the most important thing, because it is the only thing you control. Why would your entry, something in which the price, based on your price action, your entry is based on that price action, and you have no control over that price action, right? You can't guarantee you're right or wrong or otherwise. So why would that be the most important thing? Focus on the things you can control, not just in trading, but in life. We tend to get hung up in what's going on with life because we get hung up on those things that we don't control. We have no control over. You're in a relationship. That person breaks it off with you, and you're all hung up on them breaking it off with you. And you want to get it back. You want to convince them not to, and you want to, right? You have no control over that. But yet that's what you're focused on. Instead of looking back going, okay, did I contribute to this? I'm sure I did. What did I do that contributed to this that I can keep from doing, that I can work on so that I don't do next time? That's what you can control. You can't control what they're doing. Maybe you didn't do anything really, and they just got some issue going on with them. Guess what, folks? You can't change that. But yet you're focused on that. I keep telling you guys, these things I teach about trading are applicable, directly applicable to life. There's nothing I teach in trading that is not applicable to everything else in your life. And that's the big secret. Trading isn't something special, guys. It's doing the same thing that's required in every other area of your life to become successful at it, whether it's a relationship, your job, your business, some skill set you're trying to learn, some instrument you're trying to learn to play, whatever. They all require the same thing. There's nothing special about trading. They all require the same thing. I know, big, right? Anyway, let's go ahead and jump in. Let me get the chart pulled up here, guys. Hopefully you're finding this informative and whatnot here, because man, oh man, life is too short to go through it thinking things are one way when they're actually the other. And that's why we have trouble getting ahead. And again, before I pull up this chart, I'm dead serious about this idea that we lie to ourselves. We say we're really trying. We say we're really putting in the effort, but we really aren't. We're half-assing it. We're doing the bare minimum, maybe just above that. We are not going 100% in. And that's often the biggest difference between somebody who's successful in something and everybody else. Okay? I mean, this is real talk. This is real talk. And if you're not here for this, you can leave. That's fine. If you just want smoke blown up your rear end by liars out there and con artists and cosplayers, that's fine. You can go do that. That's your choice. But this is the real life. This is the real stuff, guys. Okay? All right. Mark, you set calendar reminders for the live tradings. Man, I don't know how you get it in with everything you do, man. You stay busy as heck, dude. Let's jump over here to Bitcoin. And so again, remember when everybody was crying about how the top was in and whatever way, as we were down here and how it was going to really shop on down lower, and look where we're at. We have rallied since that April 7th low. As of today's high, we've rallied about 31.5%. That's $23,500 since April 7th down here. That's less than a month, guys. Can you believe that? Most people can't. Glad to have you here, Ad Lunum. And so we're on our way, guys, and this is where I continued to tell you back when we were down there. I said, nothing has happened from a macro standpoint to make this a top. Nothing had happened. We hadn't broken down. We hadn't broken market structure. We hadn't done all that kind of stuff. When you're zooming out here, the weekly. And then, of course, we talked about the weekly and how we're above this trending support here, right? But also this right here. From the beginning, from the 2022 low area here, we were under this line at about 41, 43, right in that area on the weekly RSI. And then once we broke out above it, every lengthy pullback time, we've pulled back to it, pulled back to it, pulled back to it. And it's held this support. So as long as I continue holding a support, we should continue to look higher, and it did, and we are, and there we go, right? This is, and this isn't even really strong technical analysis. This is really basic stuff that you can use. Whereas everybody's trying to give you all these convoluted reasons why it had to drop, we just stayed simple. You just watch those things, right? People try to get really complicated, not just in trading, but in everything in life, when they don't really understand what they're talking about. So I think it was Einstein that said, if you can't explain it to a 5-year-old, then you don't understand it. That's a hard line to cross there. Distilling something, especially a really difficult subject matter, into something a 5-year-old can understand. But that's always where I'm trying to go with mine, what I'm looking at and what I'm doing. As I try to distill it down to as simple as possible. Now, when you come in, like, let's say when you come to TWC, there's a ton of stuff. There's well over 500 or 600 hours of educational content in there, right? And we talk about various things. We talk about Elliott Wave. We talk about Wyckoff. We talk about price action and volume analysis. But we do all that to help you understand overall that price is doing the same thing no matter how you're looking at it. And once you really get that, then you can start reading price action and volume to figure out what's going on. Let me see here. So I had a request for what my count is, right? So here's the thing. Let me zoom out to the weekly. Here's the thing. If we look here, we go 1, 2, 3, 4. Looks like it could be 5 here. Okay. But I think we continue up higher. And so in that case, we would get a blow off top. So this becomes then, oh, wait, I'm sorry. 1, 2, 3, 4, 5, right? So there's a couple of ways we can look at this. We can look at 1, 2, and this is all still part of wave 3. So we get 1, 2, 3, 4. And then based on the height of this pullback, we have a wave 5 of 3 target up here at about 139,500. Okay. That would then give us a wave 4. And so our wave 4 would then pull back about there. Get it down there to wave 2. Would pull back around 72,700 as a 38.2 pullback. Now, the other possibility obviously is we can get a flat in here, so we can kind of like pull down to 93, bounce back up, come back down around 93, and then go. We could also print a triangle here, sideways. Maybe this shoots up to there into June, and then through the rest of summer, we're just sideways triangling before we break out higher. It's a possibility, right? But then nonetheless, let's say we did pull back down here to 72.6. That would then give us that wave 5 target up here at around 208, 210,000. Okay. The other way to look at this is go, okay, well, maybe this is 1, 2, 3, 4, and then maybe this is 1, 2 of 5. And so if that's the case, be looking at 5 waves up here around 360,000. So when you ask, what are my higher targets? This is what I'm working from. This is the framework I'm working from. So for me, we watch that lower. First of all, we see, do we get rejected here around this 139,000, 140,000 area? And if so, do we pull back to this 72, or do we just kind of do a triangle or a flat correction there and then go up higher? Or do we kind of continue on through that overall, and then we're looking at this as a 1, 2, 3, 4, 5, which gets us a much higher kind of thing. So, I mean, that's where I'm at as far as, what are we potentially doing here? That's what I'm looking at. It doesn't mean I'm right, but until we get something happening that says it's definitely not happening, there's no reason to change, the thought process, at least for the lower targets there, right? Look at your monthly here. We reset down and oversold in April, broke back out about it. threatening to cross bullishly here in May. If we look at the monthly candles, look at that. Look at that candle there. All finding support at the yearly pivot. All finding support at the previous resistance as support right here. I mean, there's so many ways you can slice this that says we're going to break out higher and continue up, right? And so again, when you look at somebody who's been saying it's the top since 108,000 here, a top because of what? Because of what? Because there's nothing happening in terms of the cycle on this macro picture here that says the top is in. Nothing. We haven't broken down here below, let me get this out of the way here. Below 49,217. Oh my God, Chris, that's so much further from 108 though. Well, but we're talking about a cycle, right? We're talking about higher lows and lower highs and all these things coming in here. Yeah, we broke down below this here, but this was right before the top here. And the fact that we continued to fight 3 months in a row, we found support on the yearly pivot right here at the previous resistance as support. This right here says a hell of a lot more than anything that happened here on the daily that looked like a double top. There was just a local top. Does that make sense? So, again, you got to be careful of all the doomsdayers and the naysayers all across Twitter, right? I've got one fool that continually, anytime I talk about Bitcoin going higher or the DXY going lower for like probably damn near a year now, maybe 8 months, he comments on there, making stupid comments, basically calling me an idiot, more or less of the comments, right? And it's consistently correct. And yet he continues doing it. And I always wonder, why would you do that as a person? You're like publicly letting people know that you're dumb. And I don't mean dumb because you got it wrong, but dumb because you keep doing it every single time, month after month. It makes no sense. So I just give up even, replying to him anymore. It's so stupid, right? Most people in trading care more about being right than they do about being profitable. Let that sink in for a minute. Because for most of you, if you're not consistently profitable right now, I can all but guarantee that's why. That's one of the, the big things. Why? You're so scared to be wrong because wrong means you lose money, or wrong means you were loud about your idea online. And wrong says, oh my God, people are going to criticize me. People are going to criticize you anyway. Who cares? Stop caring what people think online. Do they pay your bills? Do you even know them? Do you know anything more about them other than their farm animal picture that they use as their PFP there and what their fake name is? Do you know anything else about them? I mean, you guys stop worrying about it. Who cares? You're never going to make anybody happy. Or, everybody happy. Sorry about that. You make some people happy. But the reality of it is there's going to be a lot of people who are just miserable SOBs in their life. They really are. There's absolutely nothing you can do about it. Stop trying. Do what I said earlier. Focus on the things you can control, not the things that you can't. Okay? Let me see here. Jake can play. What's up? Been a while since I've seen you comment. Explaining things to he says when we're talking about explaining things to 5-year-olds, that hits home when I'm struggling to explain things to my 5-year-old almost daily. Yeah, it does, right? Because they're 5 years old, they don't understand, right? You have to really break it down into easy concepts, very, very broad, very simple concepts, and that's not an easy thing to do normally. And you can't do it if you don't, actually understand what you're explaining, right? So yeah. James says, similar target to Fibos on your wave 5. Love both of your analysis. For sure. Oh man, great. Yeah, we like it when our targets kind of come together as well. What we found out over the last few years working together is that when our targets do kind of align more or less, usually that's where price goes. So yeah, we're excited about that too. Let me see here. Bamboo says he's looking for Bitcoin to go somewhere between 140 and 160 based off of different factors like TA, but also cycle theory and all the other data out there. Yeah, it's possible. And to be honest, would we be upset if it was 140? I wouldn't be upset, right? But again, we start with where we're at. Again, my targets are based on very large time frames and what we're looking at here. And then we kind of zoom in and we adjust on the smaller time frames as it's working out, right? So here I am on the monthly. So I've got to zoom in, here to the daily and kind of figure it out, right? If we get in a 1 and a 2 here, we're working on a 3 and a 4 and a 5 around this R2 pivot, right? If this is a 1 and a 2 right here, wave 3 is around 105,000. Wave 5 is up here about 111,000. Just beyond that 109.7 at that R2 pivot on the monthly. Gets us just slightly out to a new all-time high. Guess what? If that's all we get the dip out on 5 waves and then we pull back 3 waves, every bear is going to come back out of the woodwork all in one's talking about this was the high here and that this was the high here. And they're saying again, oh, look, the high is definitely there. I told you I was right. And then what we look for? Well, we look for a pullback from that point. Back down here around 91,000 or so. And then we look for the breakout. If we get that rejection there. By the way, in that case, from where we're at here, this is a 1 and a 2. Actually would give us, it looks like 5 waves up here, right around 201. 201 and a half, 202, somewhere right around there. And get it, these are not blow off tops or anything. These are just generally expected targets that we look for on there. So, but yeah, that's kind of where I'm looking, and it'll adjust as we continue going. But if you remember, back a year ago or whatever it was, when I was talking about targets, we were looking at potentially 120 to 130, maybe move up to 170, 180. And then we looked at additional potential movement up toward 240, 250. So, I mean, right now we're still kind of in line with all that we were looking back, a year ago, which is nice. But we'll see if we get it. The important thing about trading is not to get married to whatever it is that you think has to happen. Peter Brandt says it best. What does he say? Strong targets loosely held, something like that. I can't remember the exact phrase, and all of a sudden it just came blank on me when I was trying to say it. Strong opinions loosely held. There we go. And what that means is your opinions have to be strong enough to give you a reason to actually follow through on your trading, but weak enough so that when new information comes in that contradicts what you're looking at or that says you're probably wrong, that you're able to adjust and get out and stuff like that. Too many times we're scared to be wrong, so we stick in a trade much longer than we ever should, and we end up losing a lot more than we ever should have lost. You're going to lose money as a trader. That's the end all be all. Trading is a game of losing. So if that's the case, if that is honestly the way it is, then the absolute number one most important thing you're going to do day in and day out as a trader is proper risk management. If there's one thing you should work on more than anything else, proper risk management. 30 years I've been doing this, going on 31 years this year. I still work on my risk management because I've came to understand that that's the one thing that keeps me in the game. It's the only thing I control. So the better I can get at controlling it, the exponentially better my results are going to be down the line. Think of it as the butterfly effect, right? Little tweak on that risk management makes your profits more profitable, which has a compounding effect, right? It makes your losses smaller and less likely, compounding effect. So you're compounding your negative and you're compounding your effects both positively and the negative effects into a smaller bit. So you're winning on two fronts by continuing to work on your risk management. All right. Let's see here. Your life's been super busy. Jay can play. I'm glad you catch up with recordings, man. 5 years, 5 years. I love it, man. It's, before I ever started doing this, if somebody said people would want to listen to what you had to say, I would have been, oh, yeah, whatever, but it's good to know that people still hang around and still check out and, listen in and kind of do all that. I'm not out here to screw anybody over. I'm out here to hopefully, make your life better as a trader and help you understand things that you may not be ready or even knew that you had to understand at the time. Again, that's one of the biggest things when you're doing all this is you don't know what you don't know. And, again, it's the same way in anything in life, right? But especially with trading. You come in with these ideas, and I can all but guarantee you that the ideas that you come in with when you're first starting trading are almost the exact same ideas just about everybody else comes in when they first come in. And so you're not special in that way, which is good because that means you can forgive yourself and move on to the next, and get better, right? Because as long as you continue to cosplay that you didn't do anything wrong, as long as you continue to blame it on others, as long as you're always a victim, you're never going to get ahead. You can't. Psychologically, you cannot. Your brain will not allow you to do it. If you're kind of frustrated with your life right now, any area of your life, if you're kind of frustrated about it, go back into it and go, well, how am I in all the other areas of my life? Am I a victim? You have to be honest with yourself. Most people are, because society says you can be a victim. It's fine. Government says, and the judge and the judicial system basically says, yeah, that's fine. Go ahead and do that. We got your back. So there's no real, you don't understand that there's any kind of, positive thing for you to be, where you take responsibility for the things that are happening in your life, where you become accountable. Accountability is so huge, right? Anyway, I just kind of want to put that out there because damn, guys, seriously, it's like this big missing piece that few people are talking about and even fewer are even acknowledging. And it's the one piece that really sets you up to be successful in life or whatever it is that you're trying to do. As long as you're always a victim in your head, as long as it's always somebody else's fault, as long as it's not your fault, your brain just sticks in that area, guys. It doesn't allow you to move on. You can't figure out, well, what do I need to do to change it so I don't do this again? Does that make sense? You want to be able to change the bad mistakes that the bad decisions and the mistakes that you're making in your life. You want to change them so you don't continue making them. Again, you can see that with trading, right? If you keep making the same bad analysis because you've got this issue on this one part of it, and you continue making bad, you're going to continue to lose money. Well, but you don't want to lose money, right? So what do you have to do? You have to be honest and go, what the hell am I screwing up here? Yeah, that was my fault. It wasn't some guy I was following online who said I should buy this and do this. It wasn't somebody else for whatever reason. It was me. I put the trade in. I did whatever analysis or didn't do whatever analysis I needed to do. It was on me. And once you guys accept that and you do that consistently, like really accept that, you can then go back and look on it and go, okay, well, that doesn't define me. It doesn't define me. I'm not a terrible person because I made a mistake. And then you can move beyond it. Then you can go beyond it. And you can correct the mistakes. You don't continue making that same mistake. I cannot say this enough to y'all. Because that is honestly, again, I've been doing this for a very long time, talked to so many people. And we've been at TWC. TWC is going to be 8 years old this year. Talked to a lot of traders in there. And that's one of the biggest sticking points. You want to be a better trader? Start taking accountability in your life. Not just in trading, but in everything. You're going to see your life just improve dramatically. I promise you. You will. Lumen's been listening to me since 2018. I've learned a lot from him. I love to hear it. Thank you for continuing to come back. Seriously. Because as I said, my marketing sucks. I really lean on y'all a lot to kind of share content, let people know, come watch. You know, sign up for the free newsletter. God, I'll give you guys so much information. Now it's daily. And a little bit of snark and sarcasm in there as well, which is a lot of fun after a hard day, right? You can get that at themarketbreakdown.com. It's a 100% free newsletter. Better than most of the stuff you're going to find out there, honestly. But yeah, so right here, we're looking good where we're at right now. We are above the monthly pivot here. And I'll tell you what right now, even if you're not convinced we're bullish, as long as we're staying above this 88,177 area here on the Bitcoin all-time high index, right? As long as we're staying above that, you have absolutely no reason to think about lower. Now, just because we break down below that doesn't mean you have to think about lower, but I'm going to tell you, at least with where we are now and being above that, as long as we're above that, you have no reason to be bearish. All right, you can start thinking bearishly if you absolutely must on a close, an impulsive breakdown and close below that level. But until then, you should look for some further movement upward. DXY, here's another one, right? Again, this is that same one, right? That person I told you about earlier, commenting all this silliness up here, telling me how stupid I was, basically up here, talking about how we were going to come back down, talking about this was the structure we were looking at. But here we are, right? Now, if I'm going to flesh this out a little bit here on the weekly, it looks like we got a 1 and a 2, 3, we'll get a 4 and a 5. Let me see here. So I'm going to go with, let's go with minute right here. And then we'll come in here and go, okay, well, so then that's a 1, 2, 3, 4, and then 1, 2, 3, 4, 5 here. So if we're looking at this, then based on the height of this, this wave 3 here, right? That means we could potentially see this go up to 102.135. That would be the 38.2. It could potentially go to the 50%. I don't think it's going to go there. That's the 103.555. But we could potentially see it getting up here. Obviously, there is a fair value gap here on the weekly that we're maybe finding some issue with here. But yeah, and if we make it up here to 102.135, that'll give us a wave 5 target down here at about 93.21. Now, this is some counting. There's a lot of overlap going on here, so I'm not 100% convinced that this may be the thing here. Like if we're looking here, this looks like this could be a 1 with a flat as a 2. But either way, this becomes a 1 and a 2, and then we got a 1, 2 here, and then a 1, 2. Is this maybe a 1, 2, and then 1, 2, 3, 4, 5? So it goes like this. This is 3 and a 4. And, maybe 5 here coming down. It doesn't really matter so much there because it's still getting us around the same area. But what I'm looking at right now is this pivot here, on this monthly pivot here. So if we jump to the daily, you can see that we're topped out and overbought here. The stochastic RSI is sitting below, getting rejected, right there below neutral. All this resistance, same area here, right? Resistance support. And so we're 3 waves up here. So if we're breaking down, instead of breaking out higher, if we break down below this swing low here, 98.67, that should indicate we're head down lower, and wave 3 may still be playing out. So based on this, if we were to get that breakdown, we'd potentially be looking for wave 5 of 3 down here around 96.21. And then we'd look for the wave 4 up. So right now we're just trying to see, do we break down here or do we break out higher and head up toward that target area? Okay. What is the name of the indicator that you're using all the way to the right? Looks like a liquidity indicator. This, my friend, is VPVR. It's just your, you have your volume down here in time, right? So this is the daily time frame. So all your volume here are daily volume. This is volume at specific price levels. It tells you where the market is interested. Low volume areas, market isn't interested. Big, quick movements through it. Big, these high volume nodes, market's interested. A lot more smaller candles, a lot more overlap heading on there. Yeah. So VPVR, my settings for anybody that wants to know, I usually get asked this. My columns here, or I'm sorry, my rows are 384. I leave my value area at 70. I just change the width of the box to 10%. And then I turn off the value area high, the value area low, the point of control, the developing POC, the developing VA. And I just leave on this other stuff and just use like this bare bones kind of structure here. But yeah, this is important because what it says is all that chart that you have on the screen right there. So in this case, from all the way back here on January 21st of 2025, we can look here and go, most of the volume has come right about that level at 99.36. Now, there's a secondary area right here around 103.74. And these are the darker color. And then you'll notice the lighter color above and below. So 70% of the price action, of the volume, I'm sorry, has happened in the darker color. The other 30% are these lighter colored areas. And that's how you use it, basically. So it's if you're not used to looking left and understanding what's going on here with structure, this is a big help to get you in there. So if you're newer, you probably don't understand structure very well, swing high, swing lows, those kind of things. This can be a lifesaver if you understand and get used to using it. It'll give you that information. Looking to the left will give you, and anybody that's been with us knows I always talk about look left on your chart, right? So yeah. Sats, what's up, man? He's been listening in. Just want to say hi. Appreciate the praise earlier, Chris. You're the best teacher out, man. No, seriously, you deserve it, man. That was an amazing day you had yesterday. And you can tell them, again, you're in that. Peter's here. He's in that. Data's here. I see Allison's here. Hello, Allison. Always good to see you chiming in. But I don't know everybody that shows up for the morning live streams, but you can let them know. I don't hold anything back. If I lose, I lose. If I win, I win, right? But it's always about the discussion about what we're looking at and why and how we'd enter and why we would enter and where we would target and why as it's developing, right? And so I think that's really important because I do it live. People can say whatever they want. Oh, he can't trade, but I'm doing it live, right? So you see that I can. You see the realities of trading, though. I'm never going to tell you, oh, yeah, I'm the best trader out there. I think that's silly. I think we all have more to learn all the time, right? Let me see here. Peter loves the newsletter. He says it's hilarious. Highly recommend it. That's themarketbreakdown.com. I love that. It was a fun way to go about it. Is that, oh man, I'm going to totally butcher your name and I'm going to apologize up front, but I wanted to see what you got to say here. So is that Exon? He says, hey, Chris, long time no see. I just joined your chat. Does Ethereum chart look like an inverse head and shoulders to you? You talking about Ethereum USD or you talking about Ethereum BTC? Let me know which one and we'll talk about it. Let me see here. I'm the only adult that won't tell you to look left and right, only left. Yeah, right? There's nothing to see to the right. It's all to the left. Let me see here. Sui, huh? Hey, Bernardo, now that you're back, man, make sure you're checking out the market wrap every night. I go through probably about 20 charts, 25 charts a night with stocks and crypto alts. And we're usually talking about Sui because we've got some trades in there. Let me see if I can find my Sui chart. I'll bring it up here. Whoops, that didn't work. Let me try again. Got to look around my camera here. Oh, let me see. Where is it? I knew I had one sitting up here. Oh, well, I'm going to see if I can pull up another one real quick. Sui. Not only that, we usually end up talking about Sui during our weekly sessions as well. Sometimes with Elliott Wave or with what's it called? Oh my gosh, can't even remember what it's called. Wyckoff. or price action, or all those things. Oh, Lord have mercy. It's been a day, folks. It's been a day already. Still looking for the SUI chart. Give me just a minute here. I'm going to find it for you guys. Looks like I saved something else over it. I saved render over it recently. Like an idiot. All right. I don't have my one on here right off. So let me at least get you a local count that I'm looking at off the swing low. To me, it looks like the bottom's in. But we're going to talk about it here. Let me pull this chart for you. And let me get off here. There we are. There's the chart. All right, there we go. Yeah, you can see it here now. Okay. I mean, so, you know, again, looking at this 1, 2, 3, 4, 5, a pretty clear leading diagonal here, right? I know I say that and you're like, probably like, what? I don't know. Sure. But yeah, looks like a leading diagonal there. Gives us a 1 and a 2. As always, you should be using your fib extension tool here. You can see we're up there at the 1618. Locally here, you can see we've got a 1 and a 2. You know, is this 4 still playing out here? Possibly A, B, C, or this could be 4 here. Let me see what that pullback is at the moment. Right now we're going sideways, so there's not a clear idea of which 3 it is here. If we can get a breakdown and head down toward this $3 area at the monthly pivot, I would say that this is 3 and this is A, B. We'll get a C down here for 4. And then we'll have wave 5 up here around $4.50 pattern target based on the height of this pullback here. But usually wave 4, we're looking for the 38.2 pullback, and that just so happens align with the monthly pivot. So if we can lose this swing low here and head down there, I would be looking for that and looking for a reversal off there to carry us back up at least to about $4.50, which gets us that pattern target. And that gets us 5 waves up near the swing high, which is usually what we look for. This could, you know, continue up higher toward 497 even. But right now, all we can do is say, okay, if this breaks down, we'll look for a reversal here at 38.2. And then based on the height of that pullback, we have about a $4.52.5 target area there. Okay? So that's what I'm kind of looking at there. Let me see here. But yeah, I think what we have here coming down, like I said, I think the bottom's in. I think we've got an A, B, and a C here. And then this would get us a triangle here. B, C, D, E. Like that. So, you know, maybe a WXY or an ABC here, 3 waves down. We've broken out above that triangle resistance, so we should be good to go up higher on SUI there. See here. Let me see here. Can you look at ZCX USDT on KuCoin? I know it looks bad, but I believe it's about to bottom out. I don't see it make a new all-time high, but at least a big retrace. Okay, ZCX. Okay. Let's see what we got here. Bamboo's another one that's been with us for a while now. He lives on the other side of the world from me, but always grateful to see him showing up. KuCoin, you said here. Okay. Let me zoom out here a little bit more. I don't like that the weekly. How far has that been up there? That weekly stochastic RSI has run up pretty quick. About 80%. So here's the first thing I note if we look at the weekly, all right? Obviously, the first thing I'm interested in is this support kind of resistance here. I'm interested in, look at these. Let me see if I can zoom this in a bit here. You see how we had the little doji here, which is great, but then you see these two big wicks and then send it down lower. There is supply in these two wicks right here. You've got to overcome that if you even want to think about going higher. You absolutely have to. This is going to be tough stuff to get through. Now it's pushing up, but it's overlapping on that push up. But that's, you got to get out above that. And then after that, you have this one right here as well, which comes at this next kind of level here. So my initial thought is this is how I've got it divided. This is what I'm looking at. We've got to get above this, and then we've got to get above this here, which of course is nothing more than, remember I said look left, guys? This is why you look left. Support, resistance, support. Oh, I'm sorry. Support, resistance, resistance, resistance again. But I said, you know, if you're not used to looking left and seeing these type of things, you can use your VPVR because look what happens here. Bottom of the low volume node. Remember what I told you about low volume node? That's where you get the big candles going through because the market isn't interested, so it's got to chase price. So in other words, if you can get back up through this, you should be able to shoot up through this to the upper area here. And where's the upper area? Right here. Let me see here. Kind of this area right here. See that resistance, resistance, support. Flips the candles here. Resistance, resistance, resistance again. So yeah, so we need to get above that. Let's zoom in a little bit here now. Daily. You know, you got a 1 and a 2 here potentially. Which means you got to get up here around 0.08 to say, okay, that's probably a 1 and a 2 and a 3. We're going 5 up here. Notice your 5 waves is going to dip out just above that resistance, that low volume node I talked about, which makes sense because on this move down, you only hit it here and you hit it here. So usually you're going to come up, you're going to hit it again, maybe a few times, maybe just once, maybe a few times. You'll pull back and then you'll break out through it and you'll run up through that low volume node. That's usually how it works. So let me see here. What were your targets there? Let me see here. Take profit 45 cents and 89 cents. Oh, you're really looking for big moves up, aren't you? Okay. So if we did, let's say we get this 5 up right here. We get rejected and pull back. Probably around the 6 cent area. And then it gives us 5 waves up around 60, almost 63 cents. You're looking at 45 though. Up here. That's just a little bit above what I would have my wave 3 at. Seconds 89. It's a bit further than what I have, but you know, it can overextend and head higher. Here's the big thing, especially when we're looking at that. This is, you know, 3 waves down. So breaking out above this swing high here at 0.23791 should indicate that it's going to break out higher here and head up. Let me see here, which is what we get here. Yeah, so I mean, if we look at this, I mean, the volume's coming in right here at this resistance as support. And then these 2 volume spikes are coming in right here at this same area and this same area right here. I'm sorry, this same area right here at the bottom one. So, you know, it's volume coming up from the bottom, not volume coming in from the top. It's getting rejected, but it tried to run up. So if I'm looking at, I would look at this as a range. Probably something like this. And it seems like could potentially have a selling climax, automatic rally, secondary test. There's your bump up there in phase B. Move down into potentially a spring down here to rally up. So I mean, it looks like a nice clean, range there. We don't have on the move down here. We really don't have volume escalating. We don't have something like this, which is what you want to see if you think it's going to, continue down lower. We just don't really have a lot of participation coming in from sell side here. Again, we have demand showing up here, here, and here, but that's demand showing up, as with supply in that area. But it's not like this consistent escalation in volume as we kind of come down through here. So I think there's a good chance that may be a spring there. And if it is, there's little reason not to be looking up here around 21 cents. And if we can break out above that, this is the weekly, so a weekly candle impulsive breakout and close above that. I don't think there's any reason why we don't look for overall a move higher. Yeah. I don't hate your targets. I don't hate your targets at all there, Bamboo. Not at all. I want to definitely see some movement up through these wicks here, though, because these wicks, and not only do you have those two upper wicks, but you have this one lower wick here, all in the same area. This is a significant area. This is why you have a bump up, pull back, bump up, pull back, bump up, pull back, right in this area here. You've got all these wicks from both directions overlapping. That's difficult. That shows you there is, because we're under it, it shows you there's going to be resistance there. If we were above it, it would show you there's going to be support there. So that's what we're having to deal with. So, if we can get above that, things start looking pretty good. But yeah, I would definitely, if we can get up there around at, 9.5 cents and get the pullback, I would definitely be looking to go long on that up there toward, from maybe around 6 or 7 cents up here toward 40 cents or even 63 cents up there. So yeah. Let me see here. Mark got his jokes, man. Just reading them. Let me see here. XLM USD. Just make a copy here and do this. I know this is a crypto channel. It's not really a crypto channel. It's Bitcoin above all else. But yeah, I love talking about stocks too. So yeah, I'll take a look at that here real quick, and then I'll probably have to go. But let me see here, XLM USDT. It's a pretty uniform movement down here. Let me see. So get this kind of set up here. I mean, we've got a pretty clean channel here. I would say if we're breaking out impulsively above this, now this is the weekly, but yeah, and that's also the yearly pivot here at about 35 cents. So I'm thinking if we break out above that impulsively and close above it on the weekly, we should be good to go. Pattern target based on the height of that pullback there. At least up here around $1.30. Yeah. I think we're at least looking at that. You can see if we're pulled back right here into this low volume node. Again, look left, folks. Look at where we actually got here. You see how you have this resistance? You see how you got the candle split right here? Right there, support area? See it support over here, resistance. Keep on pulling it over. Look, support. That's a significant area. Holding that and rallying up through that yearly pivot should definitely have you looking higher there. So yeah, I don't hate XLM at all there. That's looking pretty good. Let me see here. PCT. Come on. By the way, if you guys like the fork feed on the market breakdown, my daily newsletter, now it's a daily, you should follow them on Twitter there at the forked feed, at the forked feed. Just popped it in there for y'all. He does this. He does some roasting, but really, it's all about commentary on the macro, on what's going on and whatnot, Bitcoin, alt, stuff like that. So let me see here. What were you saying, Christopher Campbell? Let's see here. Looks like it's rearing up for a monster inverse head and shoulders. Oh, you think this right here? I'm not a big. Oh, so here's the one thing, guys, about patterns. Okay, so as retail traders, you often you come in and you look at the same stuff all retail traders look at, especially nowadays where so much of that stuff is free online. The caveat, as I've explained to you guys so many times before, is that most of the free stuff when it comes to trading that you find online that's regurgitated over and over and over again are half-truths or outright lies. And so to extend that, what we know is almost all retail traders, when they first come into market, they're out within 90 days, right? Lost everything, often more. Like a bad week at the casino, right? But yet, you come in and you start using the same things. They use the same patterns. You look at the same kind of basic analysis stuff that they're looking at, right? We call it the retail analysis. So if retail comes in and uses the same thing, head and shoulders patterns, cup and handle patterns, all these kind of things, whatever, the way they're looking at it, right? That they find everywhere else online, and yet they're losing all their money. That should say, you know what, I should probably look at something else. I shouldn't really put a whole lot of emphasis on these things that the people who are losing money are putting their emphasis on. Now, obviously, it's not just that. It's also proper risk management and all this kind of stuff. But there's a reason I don't really go, spend a lot of time talking about these things, because I haven't found them very helpful throughout the last almost 31 years now. But if I was to look at this, I would say that's the ugliest damn head and shoulders I've ever seen. You got this long sideways and then this short one here, unless this became a long sideways here, If you had something like this, and then you did this, okay, maybe. But, it's kind of ugly the way it is. And so you'd be looking at like this here. I wouldn't call it an inverse head and shoulders, honestly. That doesn't mean it can't go up higher, but, to be honest, looks like an ABC and then an ABC. 1, 2, 3, 4, 5. See, this looks like 5 down here, which means we'd probably get I think we'll at least get a bounce up into the $9.40 area here around the pivot, maybe a little bit shorter there around $9, right? Maybe even 8.5, just this area here. I think there's a good chance we get a rally at least into that. But honestly, this looks like 3 waves up. And that would tell me it's corrective. See, and that's 100. I mean, that's almost so perfect. It's just barely, this third wave is just barely larger than the first wave. Almost a 1-to-1 relationship. I mean, that's screaming corrective. Is there anything else we can see with it, though? Maybe. All right. So it's corrective, right? A leading diagonal or an ending diagonal, it's ABC for 1, 2, ABC for 3, 4, ABC for 5, right? That's going to be corrective. So what could we say here? Swing low there is at 450. Swing low is it's the same low there. I would be cautious with this one, man. I would at least probably look for a rally up into this 8.5 to 9.5 area. If you can get a close above this swing high right here at 1153, that really opens it up much more for further upside. The other possibility, I'll give you this. If you can get a breakout above this swing high here at 1153, I'm looking at potentially a 1-2-1-2 here. So this would be 1, 2, 3. And instead of 5 down, this would have to be like a WXY here or an ABC. I think a WXY. Yeah, so we'd have to get above that point. But if we can do that, then we look at wave 3 up here at 39.67. Larger degree wave 3 up here at 63.46. But I would take this in steps. I would look for initial rally up into this orange area here, and then look for a breakout above this 1153 to get it headed up there toward those targets. That's possible. All right. So anyway, there we go, guys. That's going to be it. I've been on here an hour, so I'm going to get out of here. We'd love to have you. TexasWestCapital.com. Try it for a month. You know, the thing is, if you come in, just be ready to learn. Because even if you only stay for a month, there's so much that you can learn in that first month that's going to set you so much further ahead of where you are right now, no matter how experienced you are as a trader. So, you know, even if you just want and you decided after a month, maybe it's not for you, or maybe all you could afford was the month there, just come in, do it, be ready to learn, get in there, dive into everything. Get in there, get as much, soak up as much as you can. But be serious about it. It doesn't work for you if you come in and you're not serious about it. Remember what I told you about earlier about how a lot of times as human beings, we tend to say that we're really doing, you know, really trying our best and working hard, and we're really not. We're kind of half-assing it or barely above that, you know, doing like the bare minimum. Yeah, don't let that be you, all right? There's a ton of stuff in there. You know, again, you can join us live trading every Monday, Tuesday, and Thursday morning at 8:30 a.m. Central, 9:30 a.m. Eastern when the market opens. And like I said, we usually trade for about an hour, a little bit more to do that as well. Market updates, you got about 20 to 25 charts a night that we discuss in stocks and crypto. And of course, the indexes and gold and DXY and stuff like that. I have my daily charts that I update. You know, again, couple of, you know, some of them multiple times. Bitcoin gets updated at least 3 times a day. You know, we have the S&P, we have the DXY, we have the gold, silver, nat gas, crude oil, BNB, Link, Ethereum. I can't even think of everything. We got all that there. And of course, we have our 3 sessions every week on Monday, Wednesday, and Thursday that we do as well. Just trying to help you guys. And all the courses, obviously. So a lot for you guys to get in there. By the way, sign up at themarketbreakdown.com. It's a free newsletter. Daily insights into what's going on in the markets, not just crypto, but also everything else that's going on. Commentary on macro headlines and stuff like that as well. All right? We're just trying to give you information every way we can do it. Oh, by the way, I launched Applied Socioeconomic Theory newsletter last Friday. The next one's coming out today. Give me a minute. I'll tell you how to get onto that. I didn't actually hook up the what you call it, the web domain yet. But you can get it right here at, Maybe. I don't know. How do you look this up there? I guess you can go into Substack and look up applied socioeconomic theory. Oh, there it is. Socioeconomictheory.substack.com. I'm telling you guys right now that this is the basis of the way in which I look at the world in the markets. It's this idea that social mood leads to what we end up seeing in the charts and the news events and everything. So if you understand social mood, it puts you ahead of the game when it comes to the news events and the charts. And so, like I said, first one went out last week. We got a new one going out today. It'll go out every Friday. It's free. So, you know, again, if you want to learn, I'm giving you opportunities to learn, guys. Some paid, some free. So jump on them, all right? All right, guys. As always, remember the only thing you control is how much you lose. So please keep working on that risk management. I hope you guys have a great day, a great weekend. Trade safe out there. And I'll see you next week, or hopefully I'll see you over in Texas West Capitol. If you join, man, jump out there and say hi. You can find a whole bunch of friendly people that are wanting to help you get as up to date as quick as possible as you can if you're willing to talk to them. So, yeah, I'll take care. All right. Thanks a lot.